the silver bullet strategy that I'm about to show you made me completely rich, and I'm about to show you exactly how it did. I'm going to show you the exact strategy and everything behind it, unlike all these YouTube gurus that always lie. Okay, make sure you do watch the video all the way until the end to get maximum amount of value. So what you need to do is only trade within the London session kill zone. Right, this is going to be from 7 a.m. until 11 a.m. on a 5-minute time frame. You need to mark out the highs and the lows of Asian session. As you can see, I've already marked out the highs. Now I need to just mark out my lows, and if you want this indicator that marks out your Asian session, London session, and New York session, comment down below indicator and comment the country you're from, and I'll send it to you completely for free. But as soon as you mark out the highs and the lows, you need to figure out which one of these two sides gets swept first. So I'm going to play price forward now, and as you can see, the highs have completely been swept. So what I'm going to be doing now is marking this out as my liquidity point right there. So that's going to be my Asian session liquidity, Asian high range liquidity. And as soon as you've marked out the liquidity of the Asian session's highs, you need to identify which part of price is actually liquidated first. Is it the highs or is it the lows? So what I'm going to be doing now is actually playing price forward and figuring out where my breakage of structure is. It needs to look something like this, where price actually breaks on itself and gives us that market structure shift, right? So what I'm going to be doing now is actually getting that. So if I play price forward again, keep playing price forward, we're going to be getting that effect. And as you can see right there, price have completely dropped. And as you can see, we have our market structure shift, which is right here. And I'm going to be explaining why this is our market structure shift and why we use this exact candle, right? And it's because of the rule of the fractional low, right? So as you can see, if you have one candle, let's say, and you have two more candles, you need 3 candles for you to actually be able to use this fractional highs and fractional lows rule. As you can see, we need 3 candles where the candle in the middle is actually the lowest one, right? So that's all it really takes. So the candle in the middle has to be the lowest wicked candle, and the other candles can be any other shape. So as you can see, these are my 3 candles, and we're going to be marking out my lowest one as my market structure shift. So that's exactly what I did here. You can see one candle, and the one in the middle is the lowest one. As soon as you get the market structure shift, what you're going to be doing now is marking out your fair value gap. So this is my fair value gap right here. Fair value gap. And as soon as you get a fair value gap like this, which is slightly thin, what you need to do is actually place your stop loss a few pips above the first candle of the FVG. I'm going to show you exactly what I mean. But just before I continue, if you want to learn 2 more strategies that could completely make you profitable, and I personally guarantee that you become profitable within the first 30 days or you get a full refund, you can learn 2 live trading sessions a week. You can have 2 secret strategies that you can actually use, and it has 92% win rate on each of them. Also, we have 20+ trading educational videos, daily analysis, and access to a community of over 300 traders, right? So make sure you do check it out before price increases tomorrow to $200. But anyway, I'm going to be marking out my actual sell right here, placing my stop loss at the highs of the first candle of the FVG, and placing my take profit as a 1-to-3 risk reward ratio. So that's all that's left to do. Now, so 1-to-3, everything's actually in set and going to plan. And now all you need to do is play price forward and figure out where your price actually gets swept, right? So I'm going to play price forward now. And as you can see, price will enter the fair value gap just like it did there. Price entered the fair value gap, and now I'm waiting for it to go all the way down to completely smash my take profit. And you can see these are good signs because price does not close inside the fair value gap. It's only the wicks that go inside the fair value gap, which is very good for us because we know there's so much selling pressure within the markets that we can actually use to our advantage. And now if I play price forward, you can see how it's going towards the downside to go down and completely smash my take profit. And this is exactly how you'll be seeing your trades once you start using the strategy, start using it correctly. Okay, there's so much more that goes into the strategy that I only teach to my students, but you should be able to get the picture from this video, right? Also, I'll be showing you on a fundamental level how the strategy actually works and how you can start using it towards your advantage within your prop firm accounts, within your live accounts, or within whatever you're trading, crypto, anything, right? So the first thing you need to do is, as we said, you mark out the highs and the lows of Asian session. This is Asian session right here. This is the highs. This is the lows. As soon as that's done, you need to sweep one of these 2 areas. So you need to wait for one of these 2 to get swept. So let's say the highs have gotten swept. You need to mark out your liquidity area. I'm just going to put $signs because it's the same thing. As soon as you do that, you're waiting for a breakage of structure. So let's say price actually broke on itself just like this. This is going to be our market structure shift and breakage of structure. And of course, you need to look for the fractional low, the rule of the fractional low, right? And as soon as that's done, what you need to do now is actually place your fair value gap. So I'm going to be just place my fair value gap just like this. And as you can see, this is another thin fair value gap, which is very good because we've already been through how to actually deal with thin fair value gaps. So as you can see, fair value gap right there. And what I'm going to be doing is actually placing my sell limit right there, placing my stop loss a few pips above the fair value gap just to make sure there's enough breathing room for it, and placing your take profit at the lows of Asian sessions. So as soon as that's done, you just wait for price to actually go back up into the area of the FVG, just like this, enter off of it, maybe enter twice, but then it will go down completely, smashing your take profit and giving you all the money that you needed. Right, so this strategy is so easy to start using, and it's very simple. I'll be bringing out so much longer videos for you to actually see and see everything that's incorporated into the actual silver bullet strategy. Anyway guys, thanks for watching. Make sure you join my mentorship today before price increases tomorrow, and I'll see you in the next video. Take care.